Welcome to another edition of Value Driven Solutions. My name is Ron Rothberg. Today on the program, we're pleased to introduce Bennett Smith. He is the managing director of the Sequoia Consulting Group, a performance management team specializing in lower to middle market businesses. Bennett, welcome to Value Driven Solutions. How's everything going today?
Hey, Ron, thanks for having me on. Things are great.
Oh, that's awesome. So we talked about specializing in lower to middle market businesses. What are you doing to drive more value for some of these businesses that are out there today?
Yeah, so Sequoia focuses really on three areas, Ron. So the first is performance improvement for business, getting them ready to sell and then ultimately sell for the maximum value that they can command in the market. The second piece is really the M&A advisory piece of walking businesses through that very complicated and often difficult process of selling their business. And then the third and final piece is really around planning from a tax perspective and trying to mitigate as many tax burdens as we possibly can during that process as well.
One of the things you talk about is knowing before you sell, know what's coming. You really are a partner for a lot of these businesses to ask those questions that they might not be happy asking. I always say it's great. You're a plumber. You run a wonderful business. You know exactly what's going on. Sometimes some of those questions you don't even know what to ask. And
Yeah, very true. Very true.
So
very
what
true.
are some
Yeah,
of those
Ron.
questions?
Yeah, I think Ron, the biggest thing when you think about selling your business is there's really two things that are going to drive value or ultimately what your business will sell for. And one of those is obviously the financial perspective, right? We call that the quantitative piece. The other piece though, and it's less often thought about by business owners, is really the qualitative piece of the business. And ultimately that is dictated by things like, how owner independent is your company? Do you have a believable story for growth in the future after you walk away from the business? Do you have scalability and profitable scalability built into the company as well? And so those are things that potential acquirers are going to look at, and they're going to assign a value to your company based on the answers to those questions. So the more preparation that you can do to be ready for that, know that they're coming, and then build a business in a way that addresses those potential concerns, ultimately is going to maximize the value that you receive when it's time to pass on your business to whatever that next thing is for you.
So really, your marker is helping businesses grow enterprise value. That's what the Sequoia Consulting Group does on a daily basis. How do you? What are some of the steps you take to get that value proposition in place?
Sure. Well, maybe I'll start with a real world example, right? So let's say you're a business owner, you've got a great lower middle market company, you've got $2 million in EBITDA, so earnings before interest, taxes, depreciation, and amortization. And we come in, typically we'll come in and we see anywhere from 20 to 50% improvement from an EBITDA perspective after working with businesses. But let's say it's just 20%, right? So we've improved EBITDA now from $2 million to $2.4 million. And then the second piece of that is really the qualitative piece. And that ultimately dictates the multiple value on EBITDA that you'll get when you sell. And so let's say in your industry, EBITDA multiples range from maybe 5 to 7. So starting out, you've got a great business, $2 million in EBITDA, and you're at a 5x multiple value on EBITDA. So you've got a $10 million enterprise value company. What we'll come in and do is help shore up EBITDA and grow EBITDA. So now 20% improvement, we're talking about a $2.4 million EBITDA business. And then we really come in and help owners think about how to build in owner independence. So thinking about their management and operating teams after they leave, and building marketing strategies and sales strategies and growth strategies for the future, all the things that future acquirers care about relative to future cash flow. And let's say we can raise that from a 5 to a 7 multiple. Now we're talking about a $16.8 million enterprise value company, not a 10. So that's a real quick example of how we work with business owners.
When we talked earlier, you used a great analogy like a realtor. You're selling your house and the realtor comes in and says, this is the market value and this is this, and then they leave. and you're not a realtor. You don't know what to do next. So that shoulder to shoulder, arm in arm kind of thing with these businesses to provide that expertise. It's often said hard to read the label when you're inside the bottle. You have this expertise of all the different industries and other folks that you've been working with to help a business. I might be really good at plumbing, but all those other things, that might be something outside my scope of work.
Yeah, Ron, it's maybe an oversimplified analogy, right? But if you think about selling your house, maybe there's two or three steps that you'll take in that process, right? You'll hire an appraiser potentially to come tell you what you think your house is worth, and they're going to come out and they're going to walk around your property and they're going to tell you, what the value for your property is in the condition that it currently sits. And then you'll go out and maybe hire a realtor to sell that property for you as well. And if you put that in the merger and acquisition space, right, you may hire a business appraiser to come say, hey, this is what your business is worth. And whatever day it is, on that day, you probably get a pretty accurate valuation for what the company is worth. But that appraiser is going to walk away, right? And then, a realtor may be very similar to an investment bank, right, that you'd hire to help sell your business, or a business broker, right? They're going to take what they have and they're going to go sell it. Whereas what we do at Sequoia is we'll not only help on the valuation piece, but then we stick around to help business owners really create the intrinsic value inside the businesses that they own to drive up the sale price that they can command when they exit.
And it's a long game. This is a long-term partnership. People have these thoughts in their heads for a while. It's not like you turn on the light and then all of a sudden you're selling your business. These are the steps you take to have a good business, to grow a business, and to plan the exit. You talk about that a lot. Planning exit strategies with purpose. Sounds like a good plan.
Yeah, absolutely right. The Exit Planning Institute, I think their statistic is somewhere around 3% of business owners will actually receive the value that they expect when they sell their business, right? So there's a 97% chance that you're not going to get what you think your company is worth. And that's if your company sells at all. Only about 20% of businesses that go on the market actually sell. And the reason for that typically, Ron, is that people wait far too long to get ready to sell. And they wait until there's a divorce or a partner blow up or the business starts treading water. And then and they're not able to ultimately sell the company for what they could have if they had kind of planned for this all along the way.
Yeah, planning. It's a great idea. The Sequoia Consulting Group has been doing this and planning with businesses for quite some time now. Plant the seeds right now. Get in touch with Bennett Smith. Bennett Smith is the managing director of the Sequoia Consulting Group. Your number's 470-215-5995. Bennett, thank you so much for joining us on Value Driven Solutions. Great ideas to help those lower and middle market businesses to get more value on that trade, on that sale. It's great to do it now and get in touch with the Sequoia Consulting Group. Thanks, Bennett.
Thanks, Ron. Appreciate you having me.